I do want to point out, by the way, I forgot to do that at the start, but the last issuance of the sovereign gold bond took place in February 2024, and the price that was arrived at for that issuance was 6,213 rupees per gram. This is important because the prices are well above 15,000 rupees per gram even as we speak right now, despite the kind of slide that we've had. And so people who bought even in that last issuance, Vishal, have had a supernormal return. Let's face it, there are no longer products as sweet as the sovereign gold bond in the market right now. But what, in your opinion, is the way to have that gold allocation? And I think it's important to stress here, and we've been speaking about it in the run-up to this crash in gold and silver as well, it's important to look at allocation and not the FOMO kind of jumping into gold and silver that a lot of people have done.
Oh, absolutely. I think, the amount of interest in both these precious metals have garnered over the last 6 to 12 months is tremendous. And I think we need to separate out, the roles a little bit of both of these precious metals, because sometimes it can appear that they're actually doing the same thing. We've always thought that, gold is more like a stability anchor in a portfolio, and it's also a bit of a monetary hedge. So when governments spend too much money, when the dollar starts to get, look like it's not the most favored currency in the world anymore, etc., you will typically find that gold would tend to be that anchor in your portfolio at that particular point. And if you look at silver, it's really this higher volatility industrial play with some characteristics of protecting value in terms of an inflation hedge. And therefore, it's important to understand that even though both are precious metals, they don't have to be treated in exactly the same way. And you can see that in the recent correction as well, that the amount of correction that's happened on silver has been far sharper than what has happened on gold, and vice versa as well. When it was going up, silver started to gallop much more rapidly as compared to what gold did. So I think it's important to understand this and then take the allocation decision saying, okay, now that I'm clear about the roles that these asset classes play or these precious metals play, how do I want to build it into my portfolio? So traditionally, a lot of what got built was around, saying that these exposures need to be between 5 and 10% of portfolio strategically. I think with whatever is happening in the world in terms of geopolitics, the movement away from the dollar, global fiscal positions, which seem much weaker because debt has exploded, I think there may be a case to have a marginally higher exposure. So for people who were earlier looking at 5 to 10%, they might decide that I'm okay with 10 to 15 or 10 to 20. But I think what we've seen is this huge FOMO, like you pointed out, where suddenly the conversation has moved to saying there are supply mismatches, and therefore I need to put all my money to silver or to gold. And I think that is where all the risk lies, because as long as you're doing an asset allocation strategically, I think you're okay. But otherwise, I think it's a very dangerous game to play.
Disclaimers: investment in securities market are subject to market risks. Read all the related documents carefully before investing.